Hi, I'm Paul Flynn, Whitehaven's Managing Director and CEO, and along with our CFO Kevin Ball, I'd like to take you through some of the highlights from the 2025 financial year. FY25 marked our first full year of owning the Queensland operations at Daunia and Blackwater, and our enlarged business benefited from the increased scale and diversification. The sites were successfully integrated, and it was a strong year of execution across our business, with production, sales and costs meeting or exceeding guidance. With revenues of $5.8 billion and cash generation of $1.3 billion, our underlying NPAT for the year was $319 million, reflecting a strong first half and a softer second half consistent with the cyclical downturn. The full year performance means we've been able to announce a fully franked final dividend of 6 cents per share, taking the full year dividend to 15 cents per share, fully franked. Combined with a share buyback of an equal amount, Whitehaven returned up to $191 million of capital to shareholders, representing a payout ratio of 60% of FY25 underlying group NPAT. This is in line with our refreshed capital allocation framework, which Kevin will have more to say about in a moment. Safety remains a priority, and the company recorded a total recordable injury frequency rate of 4.6 across the expanded business. Our focus on environmental management has also continued to deliver the outcomes we want to see, with a third consecutive year of zero environmental enforceable actions. Across the group, managed ROM production totaled 39.1 million tonnes, which is 60% higher than FY24 and at the top of the guidance. Our Queensland operations produced 20 million tonnes alongside 19.1 million tonnes from our New South Wales operations. We achieved an average coal price of $215 per tonne. This reflects a 32% year-on-year decline in the PLV HCC index, which is the major met coal index, and an 11% decline in the average GC Newc thermal coal index relative to FY24. With our focus on cost management and productivity, Whitehaven's average unit cost of coal of $139 per tonne was better than our FY25 guidance range. Let me now hand over to Kevin to discuss the financial performance in more detail.
Whitehaven delivered a solid financial result in FY25. Our expanded and diversified portfolio, together with our prudent approach to capital management, have allowed us to navigate this period of the cycle while continuing to grow and deliver shareholder value. Underlying EBITDA of $1.4 billion reflects the strong first half result of $1 billion and a softer second half result of $400 million, reflecting the more challenging market conditions. Underlying NPAT for the year was $319 million and statutory NPAT was $649 million, after $330 million of net gains arising from the acquisition of Blackwater and Daunia and the subsequent sell-down of 30% of Blackwater to Nippon Steel and JFE. Revenues of $5.8 billion were split between 64% metallurgical coal sales and 36% thermal coal sales. $3.5 billion in revenue came from Queensland and $2.2 billion came from New South Wales. After receiving US $1.08 billion of proceeds from the Blackwater sell-down and paying the first US $500 million deferred payment to BMA, Whitehaven held a balance of $1.2 billion of cash at 30 June 2025, comfortably covering the second US $500 million payment due in April 2026. A final US $100 million payment is due in April 2027. Whitehaven's net debt at 30 June 2025 was $0.6 billion. Given the acquisition deferred payments have been catered for and the strong post-acquisition balance sheet, the capital allocation framework has been reviewed and updated to reflect the benefits of our enhanced scale and diversification. The framework now targets a higher, narrower payout range of 40 to 60% of underlying group NPAT for dividends and buybacks combined. The split between dividends and buybacks is expected to be broadly balanced by value and will take into consideration franking benefits, share register composition and the extent to which buybacks are value creating. This update will ensure Whitehaven's capital allocation framework continues to reward shareholders while maintaining and optimising operations, retaining a strong balance sheet through the cycle and responsibly growing the business when planned returns are compelling. The business remains well positioned to continue to grow and deliver strong returns for our shareholders.
Looking at market conditions, thermal coal prices have been recovering since June, and there is evidence metallurgical coal prices have stabilised ahead of a recovery in the cycle. We continue to expect long-term supply and demand dynamics will support stronger prices. Demand for Whitehaven's high CV thermal and metallurgical coal products remains strong, and our portfolio is well sold. The company's sales portfolio features long-term and reliable offtake arrangements, which reduce volume exposure to cyclical buying patterns and softer spot conditions. FY26 guidance has taken into account strategic priorities across the group and individual mine plans. We expect to produce total ROM volumes in the range of 37 to 41 million tonnes and managed coal sales between 29.5 and 33 million tonnes. Unit cost of coal is expected to be between $130 and $145 a tonne, with FY25 cost reduction initiatives factored into guidance. Cost out programs across the business targeting a further 60 to 80 million run rate of annual cost savings by the end of FY26 are underway and are not factored into unit cost guidance for FY26. Our focus across the business remains on managing costs, improving productivity and operational reliability, and optimising cash flows. FY26 will be another exciting year, and as a team, we're moving with purpose and pulling in the same direction to deliver on our goals. To close, I'd like to thank all of our people for their hard work and commitment, and our shareholders for their ongoing support. Our results once again demonstrate our commitment to deliver shareholder value, and we look forward to building upon these strong foundations in the coming year. Thank you.